Hello, hello, everyone. Welcome back to a late night live. It ain't too late where I'm at, but some of you may be, you know, night heads like me. So we're gonna get into it. We got a lot of talks, a lot to talk about with oil prices and such. This may not be a topic that everyone wants to talk about, but at the end of the day, reality is reality. We have to live with reality. You could benefit from reality or whatnot. So we're gonna get into this, but let's go ahead and drop the intro. All right, and then let's get into some oil stocks and such. All right, here we go.
Think, act, and prosper. You are now tuned into the Money Level Show.
All righty. We are back. We are back. We are streaming on YouTube and Facebook right now. So if you are there watching, be sure to drop a comment. The lives have been picking up a lot more traction lately, so I'm definitely appreciative um, of the support and people watching. So I want to continue to bring you all some great content. So I hope you all are doing well, and we got quite a bit to get into. But before we get into that, I just kind of want to talk about a few things regarding some stories that I have regarding oil and investing in certain natural resources, and I hope that you all can relate if you are a bull on these resources. um, First of all, I do want to share this new piece I got. It's a nice silver AK, pretty nice. Hopefully I don't get banned for something legal, right? 2A rights. You know what I'm saying? I'm all about that, right? um, it's funny when I talk to some of my friends, and they lean more, they lean more on the liberal side, which is cool. Like, I don't judge them for it. People got their own beliefs and their own reasons for why they believe what they believe. And it's not my job to police or convince everyone otherwise, right? But I let them know how many guns I got, and they were just like, "Dang, why you need that many guns?" And I was like, "Yeah, I actually don't need that many, but I like them, and it's my rights to carry them." And historically, that's been a right that was um, attempted to be taken away from Black people. So, um, yeah, I'm firm in it. But that's not what I came here to talk about. That's another topic for another discussion for another day, right? I do want to talk about the same conversation I had with a couple of friends who wanted to check um, my moral conscience when I told them that I invest in oil and nuclear energy. So I've shared this a little bit on the channel before, but I love getting into these debates because they were kind of like, well, we need to check your conscience because you're investing in this and this is damaging the earth and everything. And it's like, okay, yeah, like, let's say, global warming is a real thing, right? uh, I'm not saying it isn't. At the end of the day, we all still need energy, right? And people treat natural resources like they're uh, a person or something, like to hate that person. Like, it's kind of weird because it's like a natural resource should just be a natural resource, and it should be apolitical. But it's crazy how things that aren't living beings or whatnot are being made political, right? So it's kind of interesting. um but I gave the humanitarian case for it. I told them, I was like, hey, there's 770 million people in the world without energy. There's a lot of people in the world that don't have the same level of energy that we have. How much energy is wasted? I mean, we have Super Bowls every year. I mean, the NFL just started, right? Imagine just all the preparation it takes to get to the Super Bowl. right? Just how much energy is being used in that. And most of it ain't clean energy. Right. I'll tell you that right now. I mean, if you think the planes are on clean energy, then that's what you believe, right? But the planes and the training, the lights and the infrastructure for each stadium, how they use energy, the TV screens, all that type of stuff, right? Energy is just always being, wasted in a lot of ways. And so there's a lot of people in the world that don't have the same standard of energy as us, and they're going to need a cheap source of energy to get the same benefit that we've been living on, for decades, right? So that's my humanitarian case for it. My other case for it is that many people, many of these politicians, like they go, they ride in their limousines and they got, multiple freaking limousines behind them and SUVs behind them with motorcycles transporting them. They got private jets, they're flying here and there, flying here and there. And they're the ones telling us to, go electric or get an electric vehicle and such. And it's like, okay, well, how many, like, I'm from the hood, like, how many single mothers in the hood can afford an electric vehicle? You know what I mean? Like, and so that's just the reality, the difference in our realities, right? Um, and I'm not saying every electric vehicle is super expensive now, but what I'm saying is that, you know, there's a lot of hypocrisy, with when it comes to oil and it comes to these natural resources. And so that's why, I have a a strong conscience whenever I'm investing in these resources because I believe in them for different reasons, but some people like to follow the mainstream political narratives on them. However, that's not me, right? Um, so I do want to get into some news on oil, right? So I am going to share screen. If you are watching with me, please be sure to drop a comment, whether you're on Facebook or YouTube. Um, I thank you all. Always thank you all for jumping into the content with me and everything. So I'm just going to share a screen. All right. Boom. So this is a tweet from Josh Young. If you have not watched my latest interviews, two-part interview with Josh Young, he's a great dude. He has a lot of knowledge in the crude oil sector, like oil and gas sector. And so here he posts a chart. He says that the inventories, including the SPR, which is the Strategic Petroleum Reserve, that's what Biden was selling oil out of to reduce the price of gasoline. Um, and he's saying it's down to its lowest level since 1985. Right. So this is a simple concept, in economics, right? Supply and demand, right? So here you got the inventories low, since 1985, right? So someone could be like, okay, well, yeah, what did it do in 1985? But we got to look at, like, how much did the population of the world grow since then? Let's look at the U.S. population growth. We're going to look at a chart for that. And let's see where it's at. Actually, this is the right one right here. Boom. I think this is it. So we're going to look at the U.S. population growth. And we got the same supply as the 80s. So let's go ahead and share this. All right. So currently we're at, 340 million. Right. So in 1985, we were at 232 million. So we have another 100 million people in the United States. All right. Now, going back to this chart here, the inventory is at the same amount it was back in 1985, except now we have 100 million more people that are using oil every day, to go to work and whatnot. Obviously, you got to exclude kids and, things of that nature. But, uh, that people that are using gasoline powered cars, right? That are heating their homes, that are turning on their lights, right? All these different things. So oil is used for a lot of different things, right? So you got 100 million more people using the same amount of, and we have the same amount of inventory as we had in 1985. So you cannot tell me that that is not bullish for the price of oil. If you are with me, drop a comment, please. Drop a comment. Um, love to hear from you. So, that's one of the things, right? Um, and oil is used for a lot of things, right? So I remember seeing these graphics that I'm gonna show. This is a graphic I'm gonna show. This shows um, the uses for oil, right? So you got electronics due to insulating and heat resistant properties. Plastics and other petroleum based products are used in electronic components, from your speakers and smartphones to your computers, cameras, televisions. Most electronics have components derived from oil. All right. So this isn't just your car or taking, a flight, or, diesel trucks that are having to transport goods to the grocery store where you buy your groceries, right? Right. These have some everyday uses. Textiles, clothing, commonly made from petroleum based fibers, including acrylic, vegan leather, and many others, right? Sporting goods. Many common sporting equipment contain some control petroleum, including basketballs, golf balls, and such, right? So you got all these different products that are used from oil. Um, so I mean, you can't say that, okay, it's just based on, people driving cars and that's just gonna fade away. Well, no, this is used in a lot of other products, and to say that it's just, used in the, just for vehicles or whatnot. I mean, that's pure ignorance, right? So we need oil, right? Unless someone invents a replacement for these products, right? I mean, medical supplies, right? I mean, you may be in a hospital that uses petroleum products, beauty products. I mean, hair dyes, all of this, right? So, I mean, just look at the graphic here, right? You got planes, when you're getting your packages shipped to you, to your front door, think about the planes that fly it from state to state, or country to your state, and then look at the delivery trucks that drop it off and everything, right? How much freaking, you know petroleum is used in that, right? So there's a lot of uses for petroleum, and I mean, a lot of people don't even think about just the amount of semi trailers we have driving around that aren't electric, that delivered our goods to stores for us to buy. Right. So I want to go to another article here. This is an interesting one. Um, Obviously a political one, but Biden to block oil drilling in irreplaceable Alaskan wildlands. And I'm not saying that he shouldn't have done it, right? I'm just saying that it does exacerbate the problem, because the problem isn't necessarily the wild lands and such, right? The problem is that we have politicians that are uh, using a lot of legislation and power to block drilling, which is going to bring on more supply and make prices cheaper. So regardless if it was there or somewhere else, like the narrative around oil and politicians and what they're doing to attack that industry, with taxes and things of that nature, right? um, they're making the situation worse. So he moved on Wednesday to protect more than 10 million acres of Alaska's North Slope, barring oil drilling across giant swaths and canceling leases in the iconic Arctic National Wildlife Refuge issued under President Donald Trump. So was this just attack on what Trump did? He wanted to change it because Trump did it, or what? Um, which is kind of interesting because it says here it would impose a permanent ban on oil and gas development for 10.6 million acres of the reserve, but would not block ConocoPhillips' Willow project, which Biden approved there earlier this year and is poised to produce 576 million barrels of oil over the next 3 decades. Right. So why did ConocoPhillips get approved, but he blocked all the other ones? Right. It kind of makes you wonder, when our politicians chooses like winners and losers, right? Sometimes you just have people with that much power. I mean, it also kind of makes you wonder about like the inside trading and such. I mean, because we've seen like I remember when they had the big what was it, infrastructure conference or something like that, and they brought in Intel and all these places, right? They brought in the EV vehicles. I think they brought General Motors or whatnot. Didn't invite Tesla, and so it was just like, okay, like why are they promoting certain companies over others? Kind of makes you wonder, like what kind of insider trading or whatnot is going on, right? Um, but yeah, maybe they were just the first ones to get there, right? Maybe that was it. I don't know, but it's kind of suspect to me. So I do want to jump over to recession fears. I did talk to Josh Young about this in terms of. Hopefully, they let me read it, y'all. Let's see. No, let me read the article. I just want to see the chart, man. All right, they ain't gonna let me read it, y'all. But it was showing the oil price with recession. Actually, here it is right here. This is it too. All right, so we see still been a lot of talk of recession. There's a lot of talk of soft landing with the mainstream media and such, right? And so you have to decide if you believe them or if you believe the data or the charts or what, right? So as you can see, these gray sections over here are recessions that we've had. As you can see, I mean, you see all the recessions, right? So, I mean, dang, we had like 3 recessions between the 1950 and 60, which is pretty interesting. Um, and then, you get to the 70s. I mean, we had 3 recessions there. I mean, and look at this. When the recession hits, like oil is just like spiking up, right? Then it spiked up again. Obviously, the macro factors were different here. I mean, because even through on this recession, the 1980s, interest rates were so high, then oil came down and eventually collapsed, spiked again and came down. So you can see oil has this correlation with recession, like it spikes up and then it comes down, a sharp drop. So um, as we can see here in the 2008, oil shot up to $195 a barrel, dropped significantly to $64 a barrel. Rebounded, came back. I mean, for me, like I would have probably like tried to sell this top. Obviously you don't want to try to time tops and bottoms, but I would have tried to sell this top and then bought back in with low and then rolled it back up again. But then obviously it just gets killed. And then you had the pandemic, which killed it even further. And then you had this rally back, right? And it came back down and now it's back on an uptrend. So that's how oil looks with recessions. And this is a real interesting article, which I'm going to show here. Let me find it. Oh, don't tell me I wasn't even showing the chart. Was I not showing the chart? I was not showing the chart. What the heck? Y'all didn't say nothing to me. I ain't got no comments yet. But these were um, the periods with recession with oil. I mean, you see in the 70s, it's spiking up during recession, and then it spikes up again during recession. So, um, and then when you get to the 80s recession, when interest rates are very high, it gets plummeted. It plummets. You see the spike up again, 2008. I would try to sell that top, when it hit like 195 a barrel. A little bit before that, but you know, you got to trim your earnings and take profits along the way. Then it rebounded again. I would have probably bought like when it dropped, quite a bit. Let's see how long it took to drop. Let's say it was June '08, boom, boom, to January '09. It was just getting plummeted. So I would try to buy bottom. Then by June '09, it's back up to $99 a barrel, and it just keeps going up. Then it gets plummeted again. So that's what oil looks like during recession. I do want to point um, to this article, which is very, very interesting. So I don't know if y'all ever seen the movie The Big Short. The Big Short. It's about when they, four different firms and investors tried to short the house. Well, they shorted the housing market and they profited big. So Steve Eisman is the guy that's portrayed in the movie as Mark Baum, but this is the real guy, Steve Eisman. And so it talks about his bet. His bet is on infrastructure over tech, and this came out in June 2023. It says a Big Short investor who predicted the 2008 housing crisis is putting his money in stories other than tech, like U.S. infrastructure. He said during an episode of Bloomberg's Odd Lots podcast. Steve Eisman, a managing director at at financial services, Neuberger Berman, noted the meteoric rise of construction engineering companies like Quanta Services for his bullish view on the sector. I'm just fumbling over my words tonight, y'all, so y'all got to bear with me. So it talks about the stock, and he says that he attributed it to the country's infrastructure needs. He says the infrastructure stuff in the U.S. is pretty pathetic, Eisman said, noting that it's embarrassing to compare American airports to those in Hong Kong where you can literally eat off the floor. Then you get into the car, you get onto a highway. It looks like the highway was built yesterday, he added. And you come back to the United States and you're embarrassed. And so the investor then lamented on the ongoing construction near JFK Airport, which has been going on for 12 years. I could have done it myself faster, he quipped. The opportunities for the company have been enormous, so the stock has been revalued. And so, he's just saying, like, hey, we need to update our infrastructure. We need to invest in resources. We need to invest in companies being able to bring more supply online. We need to invest in our power grids. We need to invest in our bridges and such. And a lot of this stuff was built in the World War II era, and how come, and he's saying the construction at JFK, has been going on for 12 years. And, he's like, he goes to Hong Kong, you can almost eat off the floor, right? We're gonna pull up some pictures of this. Let's see. All right, let's see. Dun, 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 dun. All right, here we go. All right. We're gonna look at some photos of how does Hong Kong even look, right? I mean, I don't know if any of y'all seen it on the Kong versus Godzilla, but it was just insane on there. All right, so here we go. So I mean, we're just looking at some of the infrastructure, right? Just look at that. That's just like beautiful. They've invested like so much in their infrastructure, so much, right? I mean, it's just insane. So like when you think of that, like, and Gerald Salente, he says it a lot. He says, the business of America has been war, the business of China has been business. And he talks about how, we've spent so much on, war and everything that we haven't been investing in our infrastructure. I mean, as we can see, I mean, we're heading into a commodities bull market, and you can see that a lot of our stuff is outdated. I mean, the average speed of the what you call it, the subway in New York is about 60 miles an hour. The average speed in China is about 200. I think it's over 200 miles an hour. So things like that, right? I mean, it's like, okay, when are we going to invest in more of our infrastructure? Like we need to. And so that's that's why another reason why I'm bullish on commodities. I just think that if we go into recession next year or something, right, and commodities are going to come out roaring after that, right? They may initially get hit, but they're going to come out roaring. And so that's why I'm just like super bullish on that. What's y'all take on this? What's y'all take on the infrastructure investment, right? That Mr. Eisman talks about. Yep. Be sure to drop it in the comments below. But yeah, appreciate y'all for joining me today. I didn't get much engagement today. I mean, I see some people watching, getting no comments, but it's all good. Appreciate y'all being here with me, watching, listening to me. So I hope that you all have a blessed night and that you all take care. But leave down in the comment section below if you believe that oil's going higher, if you believe that commodities are going higher, and why. I do want to share my banner with you all. So if you're looking to purchase precious metals, I am a affiliate with Miles Franklin, who does some great research. I mean, some great service for their clients. So be sure to contact them. You can contact them at info@milesfranklin.com, or you can call them at 952-929-7006. Be sure to tell them that Daryl Thomas or the Money Level Show sent you, because you can support my channel in this way, as they, if you purchase through them, they actually plug me and hook me up so I can continue to provide this educational material for free, right? So I did get a couple comments. Ask Northwest Clips, this is listening. Thanks for speaking to us. Oil is too high at the moment, but eventually will break out. But maybe a couple years, I think. Yeah, it's kind of interesting because like obviously we can't yeah, check out the website, because but like be sure to call the actual connect with a dealer, because the dealers are going to give you way better pricing than on the website. That's kind of, they pride themselves on the relationship aspect of it. And so yeah, So be sure to make sure you call or email, connect with a dealer directly because they're going to give you fair prices, a lot fairer prices, and they come out with a special every Monday too, which I'll post it on the channel, whatnot. But oil is too high at the moment, but will eventually break out in maybe a couple of years. I think. Yeah, I think that we're in an interesting scenario because I got you. Appreciate you. Yeah, just keep stacking and keep storing your wealth. Definitely plug in with Miles Franklin when you get the chance. But yeah, so I think that right now we're in an interesting situation with the um, the supply side of it. I mean, I shared this chart earlier. I don't know if you were on then, but shared the chart earlier of Josh Young saying that the uh, crude oil inventories are the lowest since 1985. So there will obviously, if there's a recession, there will be some demand destruction. But I mean, ultimately, like you're saying, it's going to go higher because uh, the Fed can't print oil, right? So there has to be more investment into the space, more leases signed, more drilling, all of those things, right? To even bring more supply online, because supply is very short right now, very low. So, um, yeah, the Fed can't print oil, right? So that's going to take the government to get their head out there, to to turn this around. Because yeah, I mean, we're supposed to be we're supposed to be the top, and like it's like okay, we're so involved and wrapped up in these political feuds, right? That we're losing sight of a lot of important things. I mean, even the military, has come out, when they signed the Advance Act for nuclear, they were like, oh yeah, this is important for our nuclear or for our military security, right? You know what I'm saying? Like, duh, right? But I mean, hey, it is what it is, huh? I'm just gonna keep buying and keep waiting for these stocks to take off even higher because that's where it's going. That's where it's going. I mean, you can't not invest in resources for decades, over a decade, and not expect there to be a shortage of supply. You know, um, so it just kind of is what it is. So I'm buying these stocks what are cheap. I mean, they're starting to rise right now. I mean, obviously, we still have recession risks on the horizon. I mean, unless you're in the soft landing camp, I am not at all. I think that at some point we're gonna have a bad crash. So I don't believe it's gonna be a soft landing per se. I mean, the government debt is super high, the deficits are high, the interest is high, the interest on the debt is high. Um, you know, um, so yeah, yeah. So I'm just at some point we got to invest. Let's see. It's so uncertain. Oil and gas good for dividends with price spike higher. Price spike kicker. Yep. So it's kind of interesting. I was talking to Josh Young about this on the recent interview. I don't know if you caught it. It's the one I uploaded today. But we talked about the dividend payers versus um, the uh, the small market caps, which he mentioned like a very solid point where the small market caps are going to um, just rip absolutely higher, right? So you know you can compound with a dividend, so I'm thinking of it like, okay, if I compound with a dividend, say like it's 8% dividend, I was buying like Enbridge, which does like transportation and pipelines, and they pay a solid dividend. But when the price of oil like spikes even higher, these small caps are just gonna rip like crazy. Like, and he was mentioning how the big dividend payers, like, they're not necessarily, either they don't have any good projects to invest in, so they pay that money back to the shareholders, or or whatnot. And so, but the people that there's companies that don't pay high dividends, that are small market caps, that have solid business models, are investing back into more infrastructure, and making it, increasing their value that way, right? So it was pretty interesting take that I took heed of, and I was just like, okay, well, I'm waiting, quarterly for this stock to issue me a dividend at 8%, which isn't bad, right? But I could be stacking, buying shares of like these companies that are super cheap, low market caps, and because they're gonna rip just absolutely higher, right? So I mean, we can actually go look at one of them. Let's see. You said 8% compounded. Um, you said, but think long term. Yeah, so I'm thinking long term, but I just think that ultimately I'm not buying Exxon or Chevron at these high prices. So like when I can get multiple shares of a Journey Energy, that's gonna double my money quicker, right? Because like how much is Exxon going to move versus a small market cap like Journey Energy, right? So for me, like, I don't have an excessive, like a huge amount of capital that I'm investing, right? Um, at least not yet. But so like Journey Energy, for example, solid company, is trading fairly low, but I mean, obviously, in the pandemic they freaking got rocked, right? Um, but it's a company that's investing back a lot into investing their cash back into more infrastructure. I mean, you can even look at like Vital, Vital Energy, small market cap. Vital just it can just rip. Like, I mean, it just hit freaking $112 last year. I mean, now it's at 57. But yeah, these stocks can rip really fast. So I mean, even back in which I think they probably diluted some of the shares, but I mean, $610 back in 2014. I mean, I think that's some of that's diluted. But yeah, these small caps, they can double your money quick. So that's kind of where I'm investing right now. Where are they drilling? So many of these companies, I think I know Journey's in Canada. I'm not sure where Vital's at, but yeah. I mean, but then you look at like, Exxon. I mean, Exxon, I mean, it's at $114, which I have a valuation video coming out, me and Benjamin, and he brings up Exxon and Chevron. And so for me, this is 100, obviously, $114 a share. I mean, and for me, like, it's like, okay, well, obviously, if this is at $114 a share, I can get, how many shares of Journey Energy, and then all it takes is Journey Energy to double, and I made more money than where Exxon is going to go up to, because Exxon has a huge market cap, right? Let's look at the market cap of Exxon. Let me find it. $455 billion. So I mean, this will have to double, for me to double my money, right? Have to be a $1 trillion company or something like that. Versus Journey Energy. 256 million, right? So that's kind of my take on compounding. I mean, because obviously the dividend payers are very attractive, but I know that when oil rips and I'm in these small market caps, I can just double my money just really quick, because I don't have like a huge amount of capital to buy a bunch of like Exxon stock, right? I mean, Rick said that's his biggest holding, but Rick has a lot of cash, and those dividends are compounding. But for me, what makes sense is buying those small caps, and then when they rip, just being able to trim some of those positions, and eventually, maybe get into some dividend payers then. But um, yeah, I mean, I can get yep, yep. Journey has a way low PE ratio for sure. Um, I was just looking at something real quick. Yeah, because I can get, I mean, Chevron's at what, $163 a share. Let's divide that by 4. I can get 40 shares of Journey Energy for 1 share of Chevron. Um, so yeah. Yeah, so Journey's on the OTC market. That's one of Josh Young's favorite companies. He talks about a lot. I think he does he advises them or something. But I just started buying them. So you can buy them on the OTC market or the Toronto Stock Exchange. I started buying them on the Toronto Stock Exchange. I don't really mess with the OTC as much anymore because they can be just illiquid at times, uh, especially when you're trying to sell, get rid of your position. But all right, y'all, I'm gonna get going. I appreciate you. Hey, what's your name? Ask Northwest Clips. What's your name? I gotta get a name in my head, right? Oh, wait a second. All right, Anthony. Yep. Appreciate you, Anthony, for chiming in and everything. All right, y'all have a good night. Be on the lookout for some of um the new videos coming out. I got another series for another show for Grind to Greatness that I need to edit. I also have some good interviews coming up with Chad Peters of Ridgeline Minerals. So we're gonna actually go look at that really quick. So if you got any questions for Chad Peters, be sure to leave those in the comment section because I'm gonna go to their website. Yeah, some reason it's not working. Oh, wait, here it is. All right, here we go. So this is Ridgeline Minerals that you all can submit questions for Mr. Peters. All right, so they have some projects in Nevada. That's where they do some gold mines and silver mines. And yeah, he showed me some cool stuff at the symposium and everything. But yeah, he's gonna show us this 3D model and everything. So be sure to submit questions for him. Um, yeah, so he does mining in Nevada. And I'm trying to actually get out and see one of these gold mines in person at some point. I've been invited by a few different CEOs to be able to do that. And I want to get some video content at the gold mines, so that natural resource mines, so that you all can just kind of experience that with me. So we'll figure out when that happens, but it's going to be um, yeah, it'll be dope. So yeah, Chad Peters, he started this business out of his garage. So we're gonna get into the nitty gritty of that, because that's just like a cool story. Like, hey, you had this vision, and how did you get it going? I started out of his garage, so we're gonna get that story, and we're gonna talk more about Ridgeline. So if you have any questions, you can leave them here, or I will post ahead of time where you can leave them on the post. And then also I have an interview with Jay Martin of the Jay Martin Show on YouTube coming up. So be on the lookout for that. If you haven't heard of Jay Martin's show, he does a lot of big interviews, and he's going to be coming onto the channel. You got any questions for him? Be sure to leave them in the description below. So I'm super excited for this one. I'm going to be at the Vancouver Resource Investment Conference. So looking forward to this interview as well. And then I have an interview with the great Nomi Prinz. She will be up on, I think, the 27th or something like that. So she has multiple books. She has an extensive history working in the banking and finance industry. I mean, she's worked in, she is the managing director at Goldman Sachs, senior managing director at Bear Stearns, senior strategist at Lehman Brothers, and she was an analyst at Chase Manhattan Bank. And she writes about how the banking system is pretty much screwing over the average person. So, yeah, got some big interviews coming up, y'all. So be sure to stay tuned and be sure to drop comments if you got any questions or whatnot. Yeah, these are coming up. Well, alrighty, y'all. Y'all take care. Y'all have a blessed night, and we'll talk soon. All right, peace.